Hi, everyone. I'm Gary Brode from Deep Knowledge Investing. We work with hedge funds, registered investment advisors, family offices, and individuals like you to help you get better returns in the stock market. I'm here with our host, Robb Fahrion from Flying V, DKI's marketing partner. Robb, how are you this week?
I'm doing great, Gary. Happy Monday.
Thank
Off
you.
to a good start. How are you doing?
Doing all right. Yeah, it was
Good.
an interesting weekend putting together the five things for this week.
Great. Yeah, we have talking about retail sales. Higher for longer is a question we'll talk about today. Talking more about Bitcoin ETF approvals, what happened to Bitcoin, how it moved, and then the Federal Reserve as well, to see what they'll continue to do or not continue to do. Should we jump right into it?
Let's go.
First point for this week, retail sales above expectations. They were up 0.6% versus November and December.
Right. So, one of the big fears everybody had going into last year was the recession. Where's the recession? Now, we did have a recession in 2022. And yeah, it wasn't called a recession for political reasons, but we had 2 quarters of negative GDP growth. I do think that right now the economy is not as strong as the official numbers are making it seem, and that's because of government spending. So, massive amounts of government spending are juicing GDP. Government spending, whether it creates value or not, adds to gross domestic product. And that's keeping us out of a recession. But the consumer has been spending like everything is fantastic. So we did have a couple of years where people were getting stimulus checks from the government and where people were mostly sheltering at home and they weren't going to concerts, they weren't traveling, they weren't eating out, they really weren't spending a lot of money. And so people are spending down those savings like you wouldn't believe. Consumer spending is up 9 months in a row, Robb. That's a pretty great run when you consider the fact that everybody's been worried about a recession. And the key thing here is regardless of whether they're spending on good things or bad things, whether they're spending the right amount, too much, whatever it is, they're spending and it's more than what people think. And this is the kind of thing that keeps the economy hot, that keeps prices higher than expected. And it's the kind of thing that would keep Jerome Powell and the Federal Reserve from reducing rates as quickly. So when you see something like this, the immediate response is, oh no, higher for longer, meaning we may end up with higher interest rates for longer than what people expect.
What's your take, Gary? Just on, I know we've called it out before, but these consumers that consistently spend, and spending on debt. When we talk about that, they almost see that there's no repercussions to this spending. I mean, what is the mindset behind that?
Yeah, so part of it is this YOLO thing, right? You only live once. And somebody on Twitter, I had put this up on Twitter and they pointed out a really interesting thing. They said, "Hey, a lot of this may be buy now, pay later." I agree with that. There's very much this sense of telling people, go spend on everything, go enjoy your life. There's really no need to worry about tomorrow. Now, in general, as somebody who invests for a living, I think this is unwise, right? Like for me, I'd rather have capital and invest and build a better future than, have first class airfare today, or private jet or, whatever level you're at, that's fine. However, let's take a look at it from the point of view of some of these consumers. And I can understand it. They see bank bailouts, they see corporate bailouts, they see student loan bailouts. Now, some of you watching this might think that's a great thing, but regardless, you have the government picking certain debtors and saying, yeah, you don't need to pay it. And when people look at that, they say, wait a minute, this is ridiculous. This isn't fair. Why am I paying taxes and other people are getting breaks? And it sort of creates this, there's really no sense in worrying about the consequences. The other thing that's happening is we've had a lot of inflation. And, people are talking about disinflation. Again, disinflation is a change in the rate of change. It means we still have inflation, but the rate of that inflation is coming down. Okay. Fair enough. But just remember that when you have high inflation, it reduces the value of your savings, right? So if you were to save $1,000, whatever you could buy with that $1,000 today, next year you'll be able to buy less. The year after, you'll be able to buy less than that. And over the last few years, we've had an inflation rate that's higher than the interest rate on people's bank accounts. And what that does is it discourages savings. It means that people are saving at a negative rate. And when that's the case, why wouldn't you go out and spend everything now. Like, why save if the value of what you're saving is going to be worth less? And that's why, that's why people come to deep knowledge investing, because what we do is we help people invest. And the idea is that we want to earn great returns for these people and far exceed the cost of inflation, and not just increase the value of what people own in dollars, but increase their actual wealth, their buying power. And that's what we're aiming for. But not everybody is doing that, and not everybody is investing. And so it's not wise, but you could understand why people might be doing this.
Great. Point number 2, Gary, we're going to talk about Empire State Manufacturing Index hit a negative of 43.7 this month. Point number 2, Empire State Manufacturing Index is bad. Very straight, clear to the point.
Yeah, really bad. So for people who don't follow, these kinds of indexes, right? It's like negative 43.7. And, there's some say, is that good? Is that bad? It's bad. It's really bad. Negative 43.7. Let me give you a sense of how bad this is. I've got a chart in front of me right now. I'm looking at it. It's a 23-year chart. There have only been 2 times where this has been challenged. In 2008, the number was actually down less than 40. And then the only time it's been worse in the last quarter century was during the COVID lockdowns, when nobody was going to work, no one was manufacturing anything. So this is a horrible number, right? And that's literally, we've only seen it this bad once in the last quarter century, and that was due to really a one-time event. So despite high overall employment, manufacturing jobs and hours worked have fallen. And so again, like last week, what we're seeing is this dichotomy, the upstream versus the downstream numbers, right? So the consumer continues to spend. Last week, we talked about the CPI being higher than expected. So we have more nominal inflation than it's expected and more consumer spending, right? So when you get down to the consumer level, prices are high, people are spending. But when we move further upstream in the economy and we look at the manufacturers, and last week we looked at the PPI, the producers index, that was actually down. And now we have manufacturing indexes declining. And so basically what this is saying to you is that the people who are running the businesses are saying, you know what, regardless of what the consumer is doing, we think there's going to be a recession. We are throttling back. And here's where like things get really nutty. So we were just talking about a consumer number that's more likely to make the Fed pause here and keep rates higher for longer. Horrible manufacturing numbers like this actually would do the opposite. This is the kind of thing where people see this and say, my God, the Fed needs to reduce rates right now, or we're going to have a horrible recession. So again, for the second week in a row, we're talking about this discrepancy in data. And some of the data is saying the economy's in great shape, keep rates higher. Other data is saying the economy's in horrible shape, lower rates now.
Right. And yeah, one thing we should have called out at the beginning, topic of this week's 5 things, the more inconsistent data issue, and obviously seeing that here as well. Shifting gears to point 3, in the past, we've talked about Taiwan semiconductor production, some of that production moving outside of Taiwan. But point number 3 for today, Taiwan Semiconductor guidance lifts tech stocks with revenue gains of 20%. It looks like. So interested to hear more about that.
Yeah. So Taiwan Semiconductor is by far the best semiconductor manufacturer in the world. There is no other chip maker like them. There's a reason the US government is spending tens of millions of dollars, actually, sorry, billions of dollars, pardon me, billions of dollars to get them to produce here in the United States. Look, Qualcomm makes great chips. Intel does, Intel's i7 chip is still, one of the great standards for home PC or workstation. Samsung, phenomenal chip maker, but there is nobody that produces like Taiwan Semi. And so here's what we had, Rob. If we go back a couple of years when we had the COVID lockdowns and everybody went to work from home, people spent a lot of money on home offices, and everyone bought new computers for home, and they built out nice home offices, and they bought nice laptops or desktop screens. They made themselves a nice place to work at home. And what that did was that pulled forward a lot of demand. And then we had a bit of a lull in computer manufacturing because we had everybody buying everything off the shelves. And, just remember, it was only a couple years ago that we had massive chip shortages. Cars weren't being built. Cars weren't being finished. They were being
Mhm.
built and put on lots. You couldn't find certain chips for computers, graphics chips, the GPUs. Now, granted, that's not Taiwan Semiconductor's part of the market, but a couple years ago, good luck getting an NVIDIA uh, graphics card. And so all of that demand got pulled forward, and we had uh, some weak data on PC manufacturing, PC sales, chip sales. Taiwan Semiconductor came out last week. They gave guidance for 20% revenue growth for the upcoming year, for 2024. And that's a phenomenal number. And what that's telling people is, yeah, this whole chip problem, we're done with that. It's over. We're Everybody's buying computers again. Now, part of that is the AI um, fad, and people are trying to buy more powerful computers with better processors and better chips in them to keep up with AI demand. But basically, Taiwan Semiconductor just gave the green light to the chip manufacturing business. And what that did was it lifted all of the tech companies, all of the chip companies, all of the tech companies. And guess what? Those are the mega cap companies that
Right.
move the indexes. So when the tech sector moves, because they're overweighted in the index, the whole index moves. And that's why the market was up so much last week. It was literally the market was up huge last week because Taiwan Semiconductor gave good guidance. And that might sound crazy, but that's the market we're in right now.
Right. Point four made me laugh. As we know, last week we got SEC approvals on Bitcoin ETFs. In typical Bitcoin fashion, point number four: Bitcoin refuses to acknowledge the SEC approvals.
Right. Yeah. And I'm making fun of Gary Gensler a little bit right now. Gary Gensler is the chairman of the SEC, and he came out, a week ago and told people, sorry, 2 weeks ago, and told people, hey, the SEC didn't approve or endorse Bitcoin. And my response is Bitcoin doesn't need your approval. Right. They don't care. We don't care. Right. As somebody who owns Bitcoin and I self-custody it, I don't care what the SEC thinks about it. Um, and there was a great article in the paper over the weekend about China banned Bitcoin. Guess what's happening right now? It's the Chinese people are using VPNs and finding ways to buy Bitcoin. You cannot turn off this network. So here's what happened. You had a lot of people who thought that the Bitcoin ETF approvals, ETF is exchange traded fund. It's just a vehicle that makes it possible for people to buy Bitcoin exposure in a normal brokerage account. That's all we're talking about. But what that does is it opens up Bitcoin ownership to pension funds, institutional funds. People have been prevented in legacy financial institutions by compliance from owning this stuff. And there was a sense that, wait a minute, we could have billions, tens, even hundreds of billions of dollars flowing into Bitcoin, which issuance is about 900 coins a day. That's going to be cut in half in a couple of months, and that the price would skyrocket. Now, the price did run up a lot into the announcement. And I admit, I was one of those people who thought that post SEC approval, the money flows would make Bitcoin go up. And there were a bunch of people on the other side of this saying, absolutely not. It's priced in. These things are going to plummet afterwards. Well, so here's what I did. I printed out a chart. And if we go to December 31st, the end of last year, Bitcoin was trading a little over 42,000. And at the end of last week, now it did trade down today. So,
Good.
Granted, by the time this is up, the price has come down a little bit. But when I pulled this chart, at the end of last week, Bitcoin was trading just over 41,000. Okay, so we went from 42 to 47 to 41. This, from Bitcoin's point of view, is just normal volatility. Basically, Bitcoin ignored the ETF approval. And here's what's happening. The Bitcoin bulls, and granted, I'm among them, right? They're declaring victory because we've had a ton of volume on the exchange traded funds. There's been a lot of money flowing into them. And so they're declaring victory. Hey, the normies, which is sort of their condescending view of people with legacy traditional financial accounts, um, are buying into Bitcoin. So we win. The people who are saying it's priced in are saying, hey, Bitcoin is down. And that, they're of course picking the high. They're saying it went from 47 to 40, and this is horrible bear market. I'm like, all right, listen, what even it really went from 42 to 41. But even if you say 47 to 40, I don't know that that's significant in Bitcoin terms. That everybody's declaring victory. If you have to call a winner at this point, and you really don't 2 weeks in, if you have to call a winner at this point, you call it to the Bears. They have the
Slight
edge on
edge.
this slight edge. The price is down, right? It did not go through the roof as many of us expected. And again, I thought the price would go up. I was wrong on this one. That said, if you own Bitcoin, you probably have a long-term view. People
Right.
who buy Bitcoin, the hodlers, right? The people, the long-term holders, the diamond hands, there are all sorts of great jargon terms for people who have a long-term thesis on this. For those of us who own this thing long term, we don't have a 2 week point of view. We don't really care that it went from 42 to 41. I don't care that it went from 47 to 40. These are not really relevant numbers. But at the moment, everyone's happy, everyone's declaring victory. So, if you are either pro Bitcoin or anti Bitcoin, congratulations, you've been right.
Great. Yeah, I think that's the best way to put it. Obviously, still a lot to play out there.
Yeah,
Point.
and Rob, when have
Yeah.
I ever been this positive on everything and anything before? This is like our the have we should have labeled this the happy issue.
Yeah. Well, the last time we did that, I felt like it turned a little darker than I thought it was
I
going to
know we
be.
we tried, it didn't work out well. All of a
It's
sudden,
tough.
you know what? I actually I got really good sleep last night. Maybe I'm just in a good mood. Who
It's just
knows?
tough times out there. So
What
we're
can we
trying to
do?
help everybody
Right.
dredge through.
If you're watching this, you're a winner too.
Yeah, exactly. Point number 5 to wrap it up for this week. Going back to the Fed, Federal Reserve continues to reduce its balance sheet to $9 trillion. So let's talk about that.
Yeah. So what the Fed did over the last really decade or so is they engaged in this quirky thing called quantitative easing. No one fell asleep yet. I'm going to explain it and do it really briefly. Um, Quantitative easing simply means that the Fed was putting cash or liquidity into the system. It's another way that they increase asset prices and blow up asset bubbles. So if you owned stocks or real estate or any kind of assets like that, when the Fed is increasing that liquidity through quantitative easing, you did really well. And so I owned stocks, I owned my house, like we did well with this. But what they did was really you know, borderline legal. They shouldn't be manipulating the markets like this. They ran up $9 trillion on their balance sheet. For people who are used to seeing enormous numbers, this is a huge number. It is an incomprehensible number. To make things worse, roughly $2.5 trillion of that were mortgage-backed securities, which they are not allowed to own. And so you could ask, well, wait a minute, how does the Fed own things that they're not allowed to own? And the answer is because nobody stopped them. Like if you don't like that, then you would have to file a lawsuit and, play that probably through a district court or an appellate court, maybe the Supreme Court, to get them to issue an order to tell the Fed to knock it off. Um, and what they did was a couple of years ago, they said they were going to start running off their balance sheet. And that's just a fancy way of saying that as the securities they owned, the treasury securities they own on their balance sheet expire, they will simply collect the cash for that and then not reissue that debt, not continue quantitative easing. And so reversing this QE, quantitative easing, is referred to as QT, quantitative tightening. Now, I was very skeptical about this because the rate of change on the Fed balance sheet was pretty slow, but they've actually pulled it together and they've gotten that balance sheet down to what is still an enormous number. Right now, it's about 7.6, $7.7 trillion. Now, that's obscene and it's still an enormous number, but it's more than $1 trillion of quantitative tightening. And they have taken it down with, one blip for last year when we had some bank failures, Silicon Valley and First Republic and a couple of other bank failures. But by and large, the Federal Reserve has done what they said they were going to do. And I think they need to keep going. there are all kinds of rumors that they're worried about a liquidity crisis and they're going to restart quantitative easing. If they do, then get long the market right away because that's where that liquidity goes.
Great. Great. Gary, thanks again for an awesome segment and for producing this piece. I know, just speaking personally, it's always fun to see this for the week and stay in tune. And obviously doing this podcast is a lot of fun too. One thing to note for DKI followers, watchers, subscribers, today is the 22nd, but January 24th, this Wednesday, we're actually going to be increasing monthly subscription prices, currently sitting at $50. That's going to be now $100 per month. With that being said, you have time to where if you'd like to subscribe for a premium subscription, we'll grandfather in that $50 rate in perpetuity moving forward, assuming that you get that done prior to Wednesday. And again, price increase really just to continue to provide the highest value research, education, insights, technology in the investment space, and allowing us to continue to do what we do here with all of Gary, your great insights and your team's great insights as well. So just be on the lookout for that coming this upcoming Wednesday.
Yeah, thanks, Rob. I appreciate it. The two things that I would add to that: one, we've never increased prices on existing subscribers. We've committed to our current subscriber base that regardless of what we do with pricing in the future, we will honor their pricing levels and won't change them. The second is we just today got out the write-up on a new medical device company that is a takeover candidate. So that is up on the blog today. And in case you're wondering, I own it personally.
Great. Gary, thanks so much again. We'll see you next week. And thanks everybody for watching. This is Deep Knowledge Investing's 5 Things. Be sure to check out our website, deepknowledgeinvesting.com. Sign up for a free newsletter subscription. Or as always, we'd love to have you as a premium subscriber for access to all DKI content produced on the website. Gary, thanks so much as always.
All right, Rob. Thanks a lot. And everyone, thanks for watching. We really appreciate your time. Have a great week.